Your first $1,000 in Forex is the hardest. Your first $1,000 in Forex is not hard because of the market, it's hard because of you. Because that first $1,000 exposes your impatience. It exposes your greed, it exposes your fear. And most traders don't fail at $10,000. They fail trying to make their first $1,000. Let's talk about why. Small account, big emotions. When you start with $100, $200, maybe $500. Every trade feels huge. A $10 loss feels painful. A $20 win feels like victory. You're not trading the market. You're trading your emotions. And because the account is small, you want to grow it fast. So what do? You increase lot size. You overtrade. You risk 10% on one position. Why? Because in your mind, slow growth feels like no growth. But this is where most accounts die. The overleveraging trap, let's be honest. You don't want 3% per month. You want 30% per week, so you open big positions. And when it works once, your confidence explodes. You think, I figured it out. Then one bad trade, and half your account is gone. This cycle repeats over and over. Small account traders don't blow accounts because of strategy. They blow them because of leverage. Leverage magnifies emotions more than profits. Switching too early. Here's another mistake. You test a strategy for 1 week. It loses. You switch. You try another one. It loses. You switch again. But profitable trading requires data. 20 trades, 50 trades, 100 trades. You never reach consistency because you never stay long enough. Your first $1,000 requires patience. And patience feels boring. Most traders quit during boring phases. The impatience problem. Think about this. If your $500 account grows 5% per month consistently, in a year, that's powerful compounding. But 5% feels small, so you sabotage it. You think, I need faster results. But the market rewards consistency, not desperation. When you're desperate for $1,000, you trade differently, you force setups, you enter early. You ignore rules, and the market punishes that energy. Trading to escape, this is deeper. Many traders want their first $1,000 not for growth, but for escape debt, escape job, escape pressure. When you trade from pressure, every trade becomes emotional. You're not neutral. You're attached, and attachment destroys discipline. Professionals trade to execute a plan. Beginners trade to change their life overnight. That mindset is dangerous. The real secret. Here's the truth no one tells you. If you can turn $100 into $150 consistently, you can turn $10,000 into $15,000. The skill is the same. The numbers are different. Your first $1,000 is hard because it forces you to become disciplined. It forces you to respect risk. Accept losses. Stay consistent. Think long-term. That transformation is painful, but that's where growth happens. What you should focus on instead. Stop focusing on making $1,000. Focus on executing 50 clean trades, risking 1% per trade, following your rules perfectly, journaling your emotions, measuring consistency, not money, because money follows process, always. The moment you detach from the $1,000 goal, ironically, that's when it starts coming. Identity shift. Your first $1,000 requires an identity shift. You must stop thinking like, I need money fast, and start thinking like, I am building a skill for life. The market is not a lottery, it's a mirror. If you are impatient in life, you will be impatient in trading. If you lack discipline outside, you will lack discipline inside the charts. Trading improves when you improve. So yes, your first $1,000 in Forex is the hardest. Not because it's impossible, but because it forces you to grow up. It forces you to control yourself. It forces you to think long-term. And most traders aren't ready for that, but if you are, then stop chasing $1,000. Start mastering discipline, because once you master yourself, the money becomes a byproduct. This is mental edge trading, where we master the mind first, and the profits follow. See you in the next one. Subscribe, like, and share for content like this.